Good morning, ladies and gentlemen, and welcome to the show. Today is the 26th of November, 2019. Listen, glad to have you guys here. Now, let's get started. Let's open up the charts right here, and let's take a look. First thing I want to point out is this information is coming from China. The United States and Beijing have reached a common understanding on trade. China says. That's important to me. China says. U.S. Beijing reached common understanding. This is a first step. This is an actual first step, the way I see it, toward maybe some sort of a phase one deal or whatever, Top negotiators from both countries agree to maintain communications on a phase one deal, China says. So there we have it. It's the first step toward a trade deal. Let's take a look now at the Fed. The Fed, their repo operation is 2 times oversubscribed in a total scramble for year-end liquidity from these banks. Traders are keenly looking ahead to the result from today's 42-day repo, as this was the Fed's first liquidity injection, providing dealers with funding to carry them into the next year, as the operation was the first to mature in 2020, or January 6th to be precise. And as many had feared, year-end liquidity fears remain front and center, as the $25 billion operation proved to be roughly half the required size to satisfy all liquidity demands. So the repo operations continue. Let's take a look at the gold price today. Gold is dropping. It's down $1.10. What we're looking at here is $1,453. But I notice a significant rise in the price of silver today, but now it's dropping as well. It shot up. Silver shot up to like $17.06, $17.07, something like that, and now it's dropping like a stone back down. It's only 4 cents up on the day, $16.89 so far today. But it's been following a certain range here, and it hasn't really went below that range. The range is somewhere between probably $16.85 and $16.95, and we see it at $16.89 right now. Let's take a look at cryptocurrency today and see what it's doing. We see what cryptocurrency is. 195.2 billion, with a Bitcoin dominance of 66.2%. We see a little bounce in the price right here of cryptocurrencies, but still the price is remaining low compared to what it was just a week ago. Cryptocurrencies lost a bit of steam, but if we take a look at the long-term chart and we step back and take a long look at it from a distance, I did that in my show, The Delta Report, yesterday. And what we see is it's been in a bull market, cryptocurrency has, ever since it began in 2009 until now. It's been in a constant bull market. The bull market hasn't changed, but we've had these huge swings up in price. Over and over and over again, repeatedly, we've had these huge swings up in price. And then the price will fall off, but it never falls back to where it was before we get these huge upswings in price. So basically, before it rose to $1,000, it was like $60. We never seen $60 Bitcoin again after. It fell back down, but it fell back down. The lowest was I think 175 or something like that, or around 200. And then it went all the way up, and each time it goes up to a new level, it falls back down. It never goes back down to where it was before, And that's the way this time. It seems like it's got a solid floor underneath Bitcoin at around $6,500. And I don't anticipate it breaking through that floor too much. And it's getting ready for this huge big upswing in price in the future at some point. Now, how far out that is, that's the big $64,000 question, is how far out is that big rise in price, and how high will it go? I believe it's going to break the old highs of 20,000 when we get there, and it goes up, But that's in the future. Right now, it's struggling along with a lot of bearish action in the marketplace for cryptocurrency. And that's maintaining a reasonably low price. For Bitcoin, that reasonably low price right now is $71.55. And it has broke down below $7,000 in the last few days. Let's take a look now at the Dow Jones Industrial Average. I'm going to have to refresh the page to get a real good look at this morning. It's up, but it's really just riding the line. It's really not up or down. It's half of 1 percentage point, which is nothing, at 28,066 today. We're seeing this huge melt up in the market. This has been a long business cycle. We haven't had it's going back like 11 years, since the last recession. And I mean, we normally get a recession sooner, but we've already had our yield curve inversion, which is a sign the next recession is coming. And it's generally a few months out. When you get your yield curve inversion, generally the next recession is maybe 6 months or maybe a year away or so. In this case, it's dropping a little bit now, but the Dow, is melting up. It's received all this stimulation from the Fed, and this is a melt up. This is a blow off top by any definition, And as we move into the new year, it's going to be harder and harder for them to keep this Dow moving up because of the pressure to move down. It's going to require more and more support as we move into the new year. Let's take a look now at the crude oil price, 58.38, and crude oil is slowly making its way up today. It's on a little bit of an uptrend the last few days. Let me see what this chart over the 1 month. No, 1 month doesn't show me a lot. I get the 5-day. That's as best as I can do with this chart. But we can see it had a low point of 57.23. And ever since then, it's been slowly on the increase over the last few days. So we're going to keep our eye on crude oil and see how much it climbs. Let's take a look now at treasuries. And treasury yields are falling today. And today it is kind of significant. It's 3.3 basis points on the U.S. 30-year and 2.9 basis points in the U.S. 10-year, which is a relatively significant fall in treasury yields. It's not huge, but for a one-day fall, it's just fairly significant all the way out on the long end of the yield curve. It starts at around the 2-year with a 1.58 on the 2-year with a 2 basis points, and it extends out to over 3 basis points on the 30-year. So we're seeing a fair amount of movement here in U.S. Treasury yields. Let's take a look now at the dollar index today. 98.33 on the U.S. dollar index. And the dollar's starting to rise right now. And this is putting pressure on gold and silver to fall back. Dollar's riding strong. Let's take a look now at Deutsche Bank, because Deutsche Bank could sneak up on us, and today it's falling. It's fell a half of a percentage point. It's at 6.64 euros. If we go back over the last 6 months, we can see that, it's been maintaining its price even though the bank is shrinking. What's going on right now is they are working their darn best, fastest as they can, to make this bank, they're basically it's a downsizing operation, but it's also deleveraging this bank as fast as possible to try to get it down to a manageable size if it goes under, And so this deleveraging process continues within Deutsche Bank. They are deleveraging this bank as fast as possible. That's what they're doing. And while they're doing it, they're keeping the stock price supported at around maybe $7 or $8, and they're keeping it there. 6.64 euro today, and I expect this bank to go under. That's what I expect. But I expect when it does go under, that they'll have deleveraged it to a certain point where it'll be a manageable collapse. That's what I'm kind of expecting. So listen, thank you guys for listening to today's show. Give me a thumbs up, and we'll catch you guys in the very next video. Bye-bye.